we are a B2B provider. We are already aligned with a great outcome for our customer. We don't go and do a B2C business and target the same customer, and etc. We're not in that business. Our alignment is with the broker dealer, the fintech, the wealth manager that we work with. If they are not successful, we are never successful.
Right.
That completely changes how you approach these relationships. How fundamentally, you build your relationship, you build your tech stack, you build everything. So I cannot take credit for it because this has been done by the founding team and the execs. The business was already like this. We were already getting paid for great outcomes for our customers.
Right.
It was not like our B2B customer was losing money and we were like, it was making it rain. It was not. So that ViewTrade as a business has a history of delivering great outcomes. That is why we are in the business of being in business.
Hello and welcome to episode 43 of the Exponential Show. We are here at True Digital Park with our guest, Laksh Gangwani, the Chief Growth Officer at ViewTrade. Laksh, thank you for joining us this morning.
Thank you for having us. And, big fan. I watched your episode with Peiling, an amazing episode.
I appreciate that.
So, thank you for having us also.
The pleasure is all ours, and we appreciate you making the trek. You're flying in and coming here at short notice, so I appreciate that. Now, Laksh, let's get straight to the first question that we ask all our guests is your origin story. So you've made a career out of scaling businesses,
Yes.
but within that journey, you've had stints in finance, you've had entrepreneurial stints as well. So if you could walk us through some of the key milestones that you've had in your journey on the way to becoming the Chief Growth Officer, just for our audience to get to know you better.
No, absolutely. And I think taking a step back, so I started my career in technology in Motorola. So I used to work on Horizon 2, Horizon 3 technologies directly with inventors towards protecting it. So it seemed like a pretty, mundane job after a while. But what it taught me was that how to look for that one specific thing where you can innovate at, and where do you innovate? And that is like, I think that mindset carried on into everything I did after that. And so when we were building businesses, we were always thinking, what is one thing we can do better for our customers?
Right.
And then, I found the perfect home in ViewTrade. I've done this for a few different firms, but I found the perfect home in ViewTrade, where the DNA is problem solving.
Right.
So problem solving plus, my own mindset of how do we make things better, that was like the perfect marriage. And that is how we got into together. And obviously, I came in as our first exec hire in Asia Pacific, and now we are about 100 people.
Wow.
In 4 years. So supporting on platform about $53 billion. Nice. So we have had exponential growth. So
Touche.
Yes, exactly. So that's been the journey up until now. And that's it. Over to you.
Good to know. And we'll talk more about the region in general and why it's important for ViewTrade. But first, let's talk about a topic that you speak very passionately about, is 24/5 trading or overnight trading, as some people call it. And without naming names, somebody at Wells Fargo, and I'm quoting, called it the worst thing ever to happen to capital markets. You obviously have a different opinion.
Oh, yeah.
Can you talk us through perhaps why some people have a negative opinion about it and why in your mind it's something that should be worked towards?
See, I'll tell you how we see it. It's very hard to judge how somebody else sees it negatively, but I'll tell you what we see. We see this as not just another session.
Right.
We see this as additional infrastructure. And whenever additional infrastructure comes in, there are people who are skeptic of it. If you see the fiber optic infrastructure came in, people are like, oh, this is dark fiber, it's not working and stuff, it will not never work. And now all of that is powering the internet, as we know. Similar things are happening on AI. You build out infrastructure, people are like, this will never work, this is too much. And us as a human race, we do have the tendency to overbuild on infrastructure when we go, it's something we do always. However, it's not the worst thing to happen, obviously, because if you look at, let's say, the overnight session and you benchmark it to the pre, post, and the regular market hours, you're missing the point, because you cannot benchmark it to those ones. You have to benchmark it to the exchange hours in countries like, let's say, Australia, Singapore, etc. And now when you see overnight trading in and the volumes being traded and benchmarked against those, I think overnight trading sometimes does $4-5 billion. It's published numbers, we can see, all of them can see. If you see it in context of that, now you see it as an alternate to people who hold about 12 to 15 trillion of assets in the US, and they want to trade when they want to trade, right? So if you look at it from that perspective, that this is giving access to those people. It is giving the same outcome to those people, not only access, but the same outcome. So a lot of times, democratizing access means you don't democratize the outcome. That is one thing that industry has done really well here. So that part is taken care of. 2, it's on par with their local trading sessions, like the liquidity, etc. And, and 3, smart builders will come out and they will build much better institutional flows that are coming, and then this session will become bigger. So we've already seen it. It got launched, I think, in 2021, and the volumes were a few dozen of million, and now we see 4-5 billion getting traded overnight. So I think you have to look at it from the perspective of who it is built for. It is built for somebody who's outside the US, which is our client base. We speak to them, we see their aspiration, and we see the workflows they want to do, and it is built for them. It is not built for somebody, and I'm sure this Wells Fargo guy is a very smart guy. He's sitting in the US, and obviously his view is very valid. That why would I need another session? You don't, but the customer sitting outside does. So I think that's the disconnect here between what he might be or he or she might be seeing and what we are seeing. So we do see this as additional infrastructure. We know our clients are building for it. We see the workflows that are going to come as more exchanges, more institutional money come in. And then it will further help more people access retail markets in the US or the stock markets in the US.
Makes sense. Yeah, and like you said, the initial numbers kind of validate your hypothesis, right? So you already see the infrastructure being utilized to trade overnight. So it's the end customer is sort of validating the thing that you're building towards. So thanks for that context. Now, just sticking to the point about technology and infrastructure, one key thing that has changed is just tokenization of stocks, and what are some of the key trends that you see on that front, and what are the key infrastructure pieces and the key consumer pieces that make the whole thing work?
So let me break that question down in 3 parts.
Please.
Tokenization, tokenization of stocks, and then where we go from there. Okay. So see, tokenization as a technology does really well. It is fundamentally changes how you bring assets onto an electronic platform. And the assets where their value is disambiguated, or most people agree on the value, those assets will do really well on a tokenized platform. If you see how these repo and reverse repo trades are being done, and people are paying interest by the minute, that's a really good example of where tokenization adds exponentially a lot more value than the existing solution. Now, when it comes to the stock, see, my personal view is, obviously we have to separate my personal view from the view of the firm and the industry. My personal view is, a stock is already a tokenized representation of equity in a firm. So when we bring a new solution stack, what problem are we solving? And when we bring it to an instant settlement cycle, what are we breaking? So as we bring this to instant settlement cycle, that means a lot of money has to move instantly. And to give you an idea of how much more money will move, so let's say you take a trading day, and DTCC publishes these numbers, so we can look at the official numbers. So let's say 4 or 5 trillion trades, 4 or 5 notional value gets traded on a day. Only 2 or 3% is actually settled because of net settlement. So now what you need to do is you need to go from there, and now in an instant settlement world, you need to settle everything. So you need to go from, let's say, 80-90 billion of settlement on a daily basis to 4 or 5 trillion of settlement. So you will need fundamentally better rails. Who's going to pay for it? Who's going to pay for the cost of tokenization? And if you want to pay, why are we even paying? So what is the problem we are solving? There are problems we can solve, without even going into tokenization and instant settlement, etc.
Okay.
So my fundamental question is, as an industry, let's take a step back. Let's ask, what is the problem we are trying to solve here? Hype is good. Why is hype not good? You get million likes on LinkedIn, the media wants to talk to you. Everybody loves that. But, we, as the custodians of the customer trust, as, somebody who has fiduciary duty, we should ask ourselves, what problem are we going to solve with this? And if we don't have a good answer, it's okay to say, we don't have a good answer today. It's not the technology. It's not you. As soon as we have a good answer, we will provide this to you. So that's my fundamental view of tokenization, tokenized stocks. As soon as you get to a good answer, absolutely the technology should be adopted. If you don't have a good answer, I think what we have today works really well.
Interesting. Yeah. So I think that is just a lesson even outside of finances. Using a particular technology just for the sake of using it is something that a lot of people are doing these days. So I think it's, like you said, if there's a business case, a market case to be made for the use of tokenization or any technology in general, it is a healthier way of approaching the technology.
And see, Mayank, I don't want to point out to anybody, but the thing is, fundamentally, you have to see, as a business, what's my aspiration? We are very lucky and very privileged that our founders and our management has grown this business in a bootstrapped way.
Right.
So we don't have an investor.
Right.
We don't need to raise the next round.
Right.
So we are not slave to the hype.
Right.
So we can be a sane head and we can say, okay, what problem are we solving? Right. And I'm not saying we aren't solving any problem, but is it fundamentally a big problem that we solve so that we change all the infrastructure?
Right.
So we are in a very privileged position.
Right.
And and I say this with all honesty, like I feel for our competitors because they have to chase every hype cycle to raise the next round, and it's not easy. So this is where I think it's what are you chasing? We are only answerable to our customers.
Got it.
So we are not answerable to any VC, etc. as of now. So that changes the whole way you think of problems, you think of solutions, you think of how you want to grow your business. So I think that's a fundamental difference between us and some of the other firms out there, and that is why you would see us being more cautious, and when we come out with something, it's more complete rather than just hype.
Right. Yeah. Like I said, I mean, it's a privileged position to be in, but I think in a lot of ways a more sustainable way of approaching business in general. So.
I would agree because I'm part of this firm.
Fair.
I'm sure other people would have their own view on that.
But speaking of hype cycles, there is one conversation that we simply cannot avoid when we're talking technology is AI.
Yeah.
Right. So obviously there's the technology aspect of it and what it enables, but there's also the human aspect of it, and we have heard stories about layoffs and people not knowing where their career trajectories are going. So at ViewTrade, and obviously AI, I'm sure, plays a large part in different verticals of your value chain. So how do you see AI adding value currently to your processes, both internal and client facing? But at the same time, how do you see that impacting your workforce and your workforce decision moving forward?
Okay, let me break that down. That is a very good question. It is some things that very relevant, and it is something that we should be very sensitive about. So the first thing is, see, the AI hype is quite a bit real, and obviously there is AGI, etc., which will come in future, and the definitions will not go into that. That's for some other people to discuss. AI, every exec on the street, whether it is financial, non-financial, is thinking, how do I do more with less? Okay. That's whether they come out and they say this or whether they don't say this, every exec is thinking about this today. Right. How do I do more with less? You are thinking about this. You are using AI workflows, when you're putting those transcripts into AI, or you're doing those subtitles, etc. If you go and watch any of these old sitcoms, you will see there were firms who used to do those subtitles, right? So you've done the same thing.
Yeah, we used to do subtitles, like manually type out subtitles.
So you've done the same thing. You are looking at how I do more with less. How do I become more efficient? Of course. When an exec says this, it becomes very touchy and because it impacts real people. Of course. And it will impact real people. There is no two ways about it. But the way it will impact is, see, every business, there is a decisioning layer and there is a preparation layer. Decisioning layer is where you take these decisions or how you will do things, etc. And then the preparation layer is when you get to that decision. So giving you an example, let's say you are looking at this, you're trying to do, a post about this. Everything you put into AI is the preparation layer.
Right.
Some social media intern was doing that before. Now you put a prompt into ChatGPT, but when the prompt gives you an answer, you take that decision.
Right.
So if I could give an advice to everybody in any industry, move to the decisioning layer as soon as you can. If you are in the preparation layer, you are ripe for disruption.
Right.
You have to move to the decisioning layer. So this is to answer your question on the hype, how real it is, how much it will impact. It will impact you.
Got it.
And you can be in decisioning layer and you can make decisions much faster,
Right.
or you can be in the preparation layer and get disrupted. And you give a very good example, manual subtitles to automated subtitles. Now you're just taking a decision where the accuracy is, let's say, 95%.
Right.
All you're trying to find is that 5% error and fix it. So that's the part around the AI. So financial services is no different, obviously. We have to create more value. We are already benchmarked against tech firms.
Right.
Incorrectly, in my opinion. We should be benchmarked against pharma. Like we cannot bring something out tomorrow and your money vanishes and you're like, oh yeah, we were being innovative.
Right.
That doesn't work. We are regulated. So our correct benchmark is pharma, but that's a different story altogether. So we are benchmarked. We are already expected to move fast.
Right.
Our customers, everyone expects much better user experiences and etc. So we have to move fast as well. Now, for firms, again, we are a privileged firm. We don't overhire.
Right.
So we do not see this as going out there and not hiring people or having to do layoffs. We are seeing our workforce, and I can talk about my team. There's an expansion of job roles.
I see.
My marketing team is now doing design. My marketing team understands a little bit of compliance, etc. So what we are seeing is that we are seeing expansion of job roles and expansion of capabilities when you build workflows around AI.
Right.
So that's what we are seeing. We've done some bots internally, a compliance bot, which has now enabled our marketing to find compliance breaches in press releases much faster.
Right.
So there's that aspect. So it is, for what we see it as, it is enabling our workforce to expand their job roles. That's one. Two, it is helping us make everybody as smart as the smartest person in the firm. If you are the smartest person, I build an AI bot with you, everybody has access to it.
Right.
You distribute. And then obviously knowledge transfer becomes easier. Right. So that's what we are seeing. And we are not seeing this as a employee reduction or, and our CEO has been on your platform, so, you will know. Okay. And we see this as an enablement tool rather than employee reduction. So that's the two part. And then obviously there is hype.
Of course.
And, this is very real. Right. We see it every day. We talk to clients, we talk to our colleagues. We have a AI, center which is being led by one of our colleagues. And the kind of use cases we are seeing are mind-boggling, and the kind of technology access you can get today so simply by paying a $20 subscription is also mind-boggling. So that all of this is real, and I think everyone should take this very seriously. It is a very big movement in everybody's work life. So move to the decisioning layer as soon as you can.
Right. Yeah, that's I think a good way to approach things in general. It kind of applies across different sectors, different seniority levels. But there's one section of the population that I want to dive deeper on is Gen Z. And I want to look at it from two different perspectives. So one is from the workforce standpoint, because that is a population that is now getting into some of those decision-making roles. So how do you see them being either advantaged or disadvantaged with AI? So as a part of your workforce, but also you mentioned you're like pharma in finance. You're building for a longer-term horizon, right? So as Gen Z moves into more decision-making roles, how do you see ViewTrade's current and future solutions catering to those AI native decision makers?
That's a pretty good question. Again, let's split this up. Sure. Let's first talk about Gen Z and today's work. Right. We've seen so much noise, so much reaction around Gen Z being particularly at a disadvantage because entry-level jobs are gone, etc. You have to obviously feel for a young kid who's survived through COVID and this. Right. However, you have to also look at this, that Gen Z has a very big advantage, which most of them are not looking at. And I'm speaking because of our experience now. So all of these guys are digitally native.
Right.
They know platforms from day one. They have zero tolerance for friction. And they know how to do AI
Right.
very well. You don't need an entry-level job anymore. I'll tell you, in my team, we have an intern. He's 16-year-old. He built a trading application using AI. He came to us and he said, I built this application and now I want to learn about this, this, and this. We got him in. Like, he's in school, he wanted to do an internship, we got him in. He's not sitting there and thinking, you know what, let me go and complain about big tech. Right. He adopted the technology, he knows what is frictionless, he built a app for Gen Z and Gen Alpha clients. So it is up to you. It is like a tool. You take it, you have an inherent advantage, you understand this next generation that will have access to all this wealth decisioning, etc., and you can build for them. You know their mindset, you are one of them. It's a very, very big advantage. You have empathy for the target audience, you are way ahead of anybody else who's starting with you. Now, so that's one part of it, that, is Gen Z advantaged or disadvantaged? It depends on your mindset to a very large extent. I do have sympathy that, it's a very big change that they might be facing, but I have seen Gen Z and Gen Alpha folks who are not waiting, and, AI gives you the opportunity to not wait. Right. You can go and build now, no inertia needed, right? So, and I'm seeing people adopt that, so I am bound to believe that that will be the dominant trend, that more Gen Zs will not need an entry-level job. They will come in with these skills, etc., that will get them right in the mid layer of everything. Now, having said that, and that brings us to the second question, where Gen Z will have more, say in the decisioning in wealth.
Correct.
And stuff. See, before we come to ViewTrade, let's just look at how the industry per se will change. See, Gen Z will be ruthless to anybody who's frictionful. They don't have the patience for it. They've had everything at will, haptic feedback at will, everything at will. That's part one. Two, you will have to align with their outcomes. They will completely destroy you if your business model depends on them losing money, or they are not having a good outcome, but you're still making fees. I don't think that will work anymore. Every financial institution, whether it is payments, banks, everyone will have to align so that they get great outcomes also. Remember, great access for Gen Z is no longer a differentiator. Right. They were already born with it. So you cannot be making money while they are having bad outcomes. And three, they don't look at relationships like their parents used to look at. Like, they had a long-term RM. They will be like, yeah, this is our RM, and we trust him. And then that RM moved like 6 banks and then 4 independent firms, and you went with that RM. They don't look at, loyalty in the same way. Right. So fundamentally, what every financial institution has to ask themselves is, how am I going to realign my business model to great outcomes for my customer, not great access? How am I going to democratize outcomes? Right. And I'll give you an example. After this example, you will understand why outcomes and access are different. Sure. BNPL provided great democratization to credit. Okay. Everybody was like, nobody can find loans, loan shark, ruin their life. Let's bring in BNPL. Let's give people access to credit. Right. We are enabling entrepreneurs. True. What was the outcome for people? If you look at Thailand, Indonesia, there were independent studies done. Right. People were indebited even more. Yes, and
it's a big conversation here in Thailand.
Yes. Everywhere, right? There people took their lives because they couldn't pay. This industry was even more aggressive in collections, etc. So you democratized access, but not a great outcome. That will not work. That will not work now. That will not work with Gen Z at all. You have to. So every bank, every financial institution has to go back and say, how do we, deliver great outcomes for our clients and then make money off it? That has to be your, whether you're a payments company, a card company, a bank, an investment bank, anybody, you will get paid on great outcomes, period. Now, that was the whole banking. Now, let's bring it back to us. Sure. See, we are a B2B provider. we are already aligned with a great outcome for our customer. We don't go and do a B2C business and target the same customer, and etc. We're not in that business. Our alignment is with the broker dealer, the fintech, the wealth manager that we work with. If they are not successful, we are never successful.
Right.
That completely changes how you approach these relationships. How fundamentally, you build your relationship, you build your tech stack, you build everything. So I cannot take credit for it because this has been done by the founding team and the execs. The business was already like this. We were already getting paid for great outcomes for our customers.
Right.
It was not like our B2B customer was losing money and we were like, it was making it rain. It was not. So that ViewTrade as a business has a history of delivering great outcomes. That is why we are in the business of being in business, with B2B people. So I think I can't take credit for it,
of course.
Obviously, but we are already there. The industry has to catch up.
Yeah, I think that's a very healthy mindset to look at things. And again, going back to the words that we used earlier, it's a more sustainable way of doing business, especially in finance where there's more at stake. The outcomes you're delivering directly impact businesses and lives of end customers as well.
Yeah.
So it's a high stakes game where delivering good outcomes, I think, is the best case scenario for everybody.
Yeah, absolutely.
So, Laksh, at the beginning of the conversation, you mentioned being the first hire in this region, and it is very obvious from our earlier conversations and the conversations we've had today that the region is very important for not just the industry but also ViewTrade as a company. So, in that context, can you tell us more about what are the key opportunities that you see in the wider APAC region? But also, we understand that our part of the world can be slightly slow when it comes to catching up on regulatory frameworks and government decision making, and there's so many stakeholders to play with. So can you talk to both ends of that balance and how you're striking it?
It is a tough question to answer, but see, listen, the first thing I think APAC is not a single market.
Right.
That is, you realize this when you are on ground, like that you have to look at this market in the nuances that make the countries unique.
Sure.
So in our case, we have to look at whether this is a wealth preservation market or wealth creation market. How long has the wealth been in the country? It changes behavior. What is the tax regimes, etc. What's the technology status? How big is the technology workforce? So we look at these number of different parameters. But the underlying question that I think we ask ourselves every time is, are we going to make this ecosystem better? If we are coming in, are we going to make this ecosystem better, and how?
Right.
And the answer to this question is very different in every single country. And we are sitting in Thailand, so let me give you the example of Thailand. So when we came to Thailand and we asked this question, and the customers' challenges will never show up and they will never say, tax is my problem or this is my problem. The problem is never clearly presented to you. It is just same as if you go to a doctor.
Right.
You don't say, I am suffering from hepatitis C, this.
Right.
You say, I have fever, I have this. So how these problems show up to us is as inefficiency.
Right.
More resources getting spent on where they shouldn't be getting spent. Operating model challenges, etc. So we came to Thailand, we noticed a pattern that there was operational inefficiency when it comes to tax filings, etc. And so we went deeper into it, and we realized that even with all the willingness, the industry cannot solve this problem on its own, because the first step towards solving these tax challenges in the US was getting the KYC of the country approved.
Got it.
That was not done. You will only become a QI once that KYC is approved.
Understood.
So we then worked with the industry. We brought everybody together. We worked with ASCO. They did an amazing job. We put in our resources, and we got the KYC approved.
Right.
It took us a year to get that done. Now, if you ask me if I am somebody who's just pushing product or peddling product, that's none of my business.
Right.
Because there have been broker dealers, etc., before us here. They
I'm sure.
make good money here, but none of them solve this challenge. But our fundamental question was, how will we make this whole ecosystem better?
Right.
So that was the first part. 2, we understand the industry has had a long-term relationship with certain vendors. So we build those relationships rather than trying to displace them. We are enabling them to now tackle a much larger range of markets. So we are taking a partnership approach here.
Got it.
And third part, we are hiring locally. We're bringing in, we have a couple of people here. We have another headcount coming in. So we want to support Thailand from Thailand because of the uniqueness.
Right.
So each time you would go into a decision making, it is based on this fundamental question. How will we make this ecosystem better? And by doing what we did, we have put Thailand on a path to saving about 442 million Thai baht a year.
That's a significant amount.
Yeah. Now an industry which is already under pressure from zero trading and this and that, it is a blessing in disguise. Now you are going to solve a tax problem.
Right.
Now I am helping you take all that money and put it into your user journeys, your systems, etc., and build a better outcome for your customers. So this is what happens when you approach it from how can I make this thing better? How can I build a solution that makes the whole ecosystem better? Right. This is how it fundamentally changes, Now, were there broker dealers before us? Without naming names, yes. Did they know of this problem? Obviously. But this is where, the whole mindset that I was talking to you about, you have to align with the customer's outcome.
Right.
Because we are so closely aligned to our customers becoming efficient and great outcomes, we solved this problem and not anybody else in Thailand.
Right.
And this was in our first entry, not 5 years later.
Right.
The first time we came to Thailand. So I think this is where, our approach is. This is how we look at APAC as every single market. How we looked at Australia was very different. How we are solving India and, the IFSC, and how we work with the regulators to build frameworks to, enable about 1.4 billion people to be accessing, global markets in a very regulated way. So how we did all of these markets is different. So I think painting it as APAC sometimes takes the nuances away. Sure. So we look at it from country by country perspective in the way I just told you.
Yeah, that's great feedback, and it aligns with what I've heard from other guests as well, where we ask any regional question, the first feedback is that there is no monolith here.
Yeah, there's no region.
Right. And there's so many cultural differences, so many regulatory differences. In your case, obviously, you mentioned there's maturity of the market difference as well. So it's, I'm sure there's a lot of nuances that you have to juggle on a day-to-day. But one thing that I draw from your answer is the fact that because you're able to have boots on the ground, understand the local contexts better, I think you're able to serve those local markets in their local contexts better than people who might be.
Yeah. So, but Mayank, it all starts from the organizational view that we want to deliver great outcomes and we want to deliver solutions which deliver great outcomes. Right. If you start from there, then you need local people on ground. You need to under cultural nuances locally. So all of that starts from, so if anyone is hearing and they have a capital market challenge, which nobody can solve, they should come to us because we want to build that for you. That is what we want to do. Obviously we do brokerage, we do technology, we do all of these things. But most of our customers are with us because we solve really complex challenges for them. Right. And I think that leads to everything else. You start from there and everything else follows. So, we don't start with saying, let's hire 5 people in Thailand. We start from what's the problem we can solve? How can we make the ecosystem better? And this becomes a natural choice of sorts.
Yeah, and just the complexity behind the scenes that you abstract for a lot of customers is something that I came to appreciate during my conversation with Tony earlier. Is there's a lot that goes behind the scenes to make life easy for the customer, and like I said, deliver good outcomes for them.
Yeah.
So I have a deeper appreciation for the.
Yeah, I know, and but you should also remember, anytime you don't see the complexity, somebody's doing their job really well because we are absorbing that. We are the sponge that absorbs all that complexity. Right. So you see the great outcome that you are seeing.
Makes sense.
I'm sure you guys do the same thing. Nobody sees how much effort you have put into. I have this setup here.
Right.
Everybody sees the finished product. I know, you have 3 cameras, 5 live audience. Everybody's sitting here and they're doing this. It is hard to do this stuff. So, but when you see a finished product, it just looks like one of the trillions of videos on YouTube. So it is I appreciate what you guys are doing. You're doing the same thing as us, building a platform to have conversations like this. So thank you so much for having us.
That was very kind of you. Now, that brings me to perhaps the last topic of the day is just looking ahead. So what are things that you are the most excited about? Not just for ViewTrade globally, but also perhaps in this region, in some of the key markets that you operate in, and any things that you still feel in the industry that we need to change or evolve moving forward?
See, I'll tell you that I have worked in many different firms, and in my career, and I can tell you after coming to ViewTrade, and when you are paid, when the customer gets a great outcome only,
Right.
that changes the fundamental way of you operate as a firm. So across the financial industry, everybody should just get paid when they deliver a great outcome to the customer. Otherwise, they shouldn't get paid. If you want me to tell you one thing that should change across the globe, that is one thing. You should only get paid when you deliver a great outcome for your customer. Period.
Right.
It will fundamentally change how the financial industry works or how any industry works.
Right.
Yeah, that is one thing I would like to change. It is because I've seen both the sides and I know how much your mindset changes when your incentive is tied to the customer's incentive.
That's a great way of looking at things. And like you said, it's not just a finance-only approach, right?
Yeah.
You can just copy-paste that advice for pretty much any industry.
Yeah, it is like life in advice,
True,
and
true, but it's easier said than done, right? It's one thing to say that we are customer-centric and we want to deliver good output, but when you need to walk the talk, not many people, not many companies are able to pull that off.
But Mayank, let's be honest here. We have the privilege, or any financial institution has the privilege of being a financial institution because the customer trusts you.
Of course.
If there is no trust, then you are not a financial institution. You are a ledger.
True. So,
If you look at any bank run, what happened? It was a bank one day and then it was a ruin the other day, right? The customer trust was gone.
Right.
So why would you not want to protect this? Why wouldn't you want to be on the customer's outcome side? Why would you be a B2B model one day and the next day you become a B2C model and you start targeting the customers of the same customer who brought you to this point? Why?
Right.
That is my fundamental question, and as an organization, I'm very glad that, we take this trust, we take these outcomes and everything along with that very seriously. That is why, your ViewTrade has survived 26, 27 years, now sits on 53 billion of assets and, does 300 something billion of trades, etc. Because fundamentally the trust is built, great outcomes are built, and that is how you build great businesses. Period. That's it. I'm experiencing this myself.
Sure. Yeah, I mean, it's good learnings for me as well because when you say it, when Tony said it earlier, everything all sounds so obvious, but these are things that in our day-to-day grind we don't really think about. We're as a lot of organizations, we're not obsessed with the delivering of great value to customers. So I think it's something that we all as a collective need to take a step back. And think about. Now, to end it on a positive note, what excites you about this region moving forward the next few years?
See, I think everything is very positive, mate. Like it sounds a little stringent and a little strict because, that is the kind of, passion we have for this. But overall, see, if you look at the region per se, the demographic is great. Right. It's a region which is creating wealth, rather than preserving wealth. Right. It is a completely different mindset. There is so much young people who are coming in. AI will be a very, very big enabler of these young. So there are a lot of positive things to look forward to. If you look at this whole region, I think this region is just getting started. Its growth curve is just getting started. So we'll see more growth coming in. And and we are going to be here to be part of that growth, with everyone else.
And as outsiders looking in, we're going to be following your journey more now that we have gotten to know you better. I really appreciate you taking the time today. I'm glad we did this. There was a lot of interesting takeaways for me, both in terms of how just financial infrastructure works, but also just good fundamental sound business practices. So
you have to thank the leadership. Those were already in place before I came in. I only came in much later and took it forward. But I do agree that everyone who's looking at it, we are in the industry of trust. Take a step back and say, what this decision, is it going to help move that trust forward or is it going to create a trust deficit? And then every smart person knows what to do from there. So
I'll just end this here, clip it on social media, and that's it.
That's it. Yes, we will end it here. Yes, thank you.
Thank you, Laksh. Thanks for your time. Thanks to everybody who tuned in. If you like the episode, make sure to subscribe, and we'll see you in the next one.
Absolutely. Please do subscribe. They are working really hard. They're doing some really good conversations. You should subscribe. So,
thank you, Laksh.
Thanks.